Hello and welcome to the Opening the Gates H1 2025 UK property market update. So for anyone who is in doubt, H1 2025 means the first 6 months a year, so the first half of the year. And I'm going to be looking at how that compares to the last half of 2024, year on year, the first half of 2024, and then also the first half of years gone by. So 23, 22, 21, 20. So we can work out a half a dozen year average. So you're going to be going through properties for sale, new listings, sales agreed, price changes, mortgage approvals, transaction numbers, etc., etc. If you tuned in before, you know that's what's going to happen. And if you're new here, you're going to be getting lots and lots of comprehensive market updates. So I'm going to share my screen and jump straight into it. Right, okay, so to start with, uh, year on year, 8.3% increase in stock levels, 3% up on the previous half year, and 24.5% up on the 6 year average. Seem to say this every single time I do an update. Stock levels are incredibly high. Buyers have more choice, which is great news, but it also means sellers have more competition. Only those who are motivated, realistic on pricing, and have good marketing and presentation are actually getting moved. Stock levels are at their highest point since October 2013. So just bear that in mind for any sellers who are trying to get a crazy high price. They need to remember that buyers have a lot more choice than they have done in recent years. On to new listings, 4% up on last year, almost 19.5% up on the second half of 2024, and almost 14.5% up on the 6 year average. So there are definitely sellers coming to the market, which is great news. It shows confidence that people are wanting to move. Most sellers are also buyers, and most sellers who are buyers don't put their house on the market until they have found somewhere. So it just shows that there is underlying confidence in the market. People want to move, but they are cost conscious and they're only shopping when they see value. Sales agreed up 6.5% on last year, almost 12% up on the back end of 2024, and 6% up on the 6 year average. So it shows that buyer demand is definitely there. If the price is right, buyers will part with their money, but you've got to get the pricing right from the outset. Touching on that, next one is price changes, 17% up year on year, 15.5% up on the second half of 24, and 47% up on the 6 year average for price reductions. So I'm just going to go look at my other screen to share a couple of bits. There was approximately 563,000 price reductions in the first half of 2025, and June saw the biggest ever month for price reductions that I've seen on record, with a whopping 107,000 price reductions. Now, some negative commentators might say the market is crashing and oh my God, no, it's just those sellers that are too optimistic, unrealistic, those estate agents overvaluing, which you're always going to get. They're chopping their prices. Now, if we're a glass half full on that, great news. Sellers are reacting to market. Estate agents are appreciating supply and demand levels and are realigning prices, which in turn means we are increasing sales. Now, onto withdrawal numbers, down 2.5% year on year, 13% on the second half of 2024, but 10% up on the 6 year average. So, bit of a mixed bag there. There are properties withdrawn from the market, but the key thing for me is a lot more of price reducing rather than just withdrawing from the market. It shows that there is definitely commitment from sellers, which I'd much prefer than just unrealistic, unmotivated sellers just withdrawn from the market. So I see that as a positive. Fall throughs up 14% year on year, 2% on the back end of 24, and just over 11.5% up on the 6 year average. Every single time I do a podcast, I say this. Speak to Brian Mansell at Gazelle. I strongly recommend reservation agreements. And then, very interestingly, the data that has come out of 28 and Chris Watkin showing the quicker you sell a property, the more likely it is to complete. Reduced properties are more likely to fall through. So basically, market it correctly, price it correctly, get it sold sooner rather than later, you're more likely to get through to the finish line. It is as simple as that. It is not rocket science, the property market. In terms of relisting, so sellers returned to the market, 11% up year on year. Almost 11% on the back end of 24, and almost 9% up on 6 average. So there are sellers returning to the market. I think it was in the previous sort of one before Rightmove House Price Index. I think it was a 32% increase in sellers switching estate agents. And I had done my own back of a fag packet research not that long ago that highlighted around 20, 25% of properties sold are being sold with the second, third, fourth, fifth agent. And I've had data come out of Propel recently confirming that to be the case. It is around 20%. So if you do see anything online saying that secondhand stock selling is single digits and you've stopped prospecting secondhand stock, please do ignore that. The data shows that it is more like around 20%, one in five are selling after switching estate agents. If anyone wants to discuss switcher strategy with me and how you can get through more doors of on-market stock, please do get in contact. I'd be very happy to discuss that. Right, on to pricing. So again, I just need to go over to my other screen. New listing asking price. Um, where are we at? So 437,000 a year ago, it now stands at 440,000 and it's 419 at the back end of 24. So slight movement upwards in the average asking price of new listings. And then pounds per square foot, it's the same story. It has crept up a bit more from 373 to 390. So I think that's about a 4.5% increase year on year on the pounds per square foot. And on the average asking price, it's just under 1%, which is about £3,500 to £4,000. And then sales agreed, 359.5. It now stands at just under £364,000. So that's slightly up on last year and also on the back end of 2024. So sales agreed asking price is up almost £4,500. And that equates to about 1.2% year on year, and 1.77% on pounds per square foot. So the pounds per square foot now sits at 345 versus 339 a year ago. This data here on asking prices. So, and remember, sales agreed. These are sales subject to contract between the 1st of January and the end of June. That's based on the asking price rather than what it's actually achieved, because that data is not going to be on Land Registry for a while yet. Bear in mind as well, again, if I go back to my stats, only 56% of properties have sold so far this year. So just going back up to new listings, asking price, it's all well and good sellers and estate agents quoting that when they're looking at listings. We've actually got to be looking at what things are selling for. Now, the other thing as well is that if you look at Rightmove across the country, only 43% of properties on Rightmove are currently showing as sold. So that 56% stat isn't getting any better. If anything, it's actually getting a bit worse as more and more stock comes on the market. Now, going back to the price reductions that I said about earlier, just looking at my other screen, I forgot to mention so far this year, 47% of listings have had a price reduction. Now, in terms of timing as well, 22% of listings have been on the market for 6 months plus, 23% have been on for 3 to 6 months, and 31% have gone on to sell in 30 days. That's the lowest point since May 2020. So there's a lot of stale stock sticking on the market where it's just gone on at too much money. So 45% of properties have been on the market for more than 90 days based on that data from Zoopla. Now, the average unsold property has been on the market for 171 days, and it's taking on average 76 days to find a buyer, plus another 160 days to complete. So as I record this on the 8th of July, the average home mover listing their property now is not going to be moving in 2025. Let that sink in, and maybe that should have an impact on what your marketing campaigns would be as well. Right. Moving on to the next bit, I've rambled on there a bit. 12-month net mortgage approvals for house purchases. Net mortgage approvals for house purchases increased by just under 2,500 in May to 63,000. And the approvals for remortgaging also increased by 6,200 to 41.5. This is the largest increase since February 2024. So mortgage approvals for house purchases, they're up 4% month on month, which is great news. 5% year on year and 5.15% up on the 10-year average. They are slightly down 2.15% on the 12-month average. And if you look at the screen now, kind of makes sense because there would have been the hurry across summer and autumn last year and the winter to try and get through to the stamp duty deadline. But it shows that future predictions of market demand, which is mortgage approvals, is showing we're in a really healthy market at the moment. So again, pricing correctly, the buyers are there, they've all parked their money, they just need to see value. So I've touched on the mortgage approvals for 10 years as well. I think I did anyway. Yeah, 5.15% up on 10-year average. Right, transaction numbers. In terms of the financial year, currently transaction levels are 10% below, beg your pardon, start again, 18.5% below the 10-year average for financial year. So transaction levels are down, unsurprisingly, when we've had the spike with the stamp duty changes at the end of March, and then April, May would have been more subdued. So something to bear in mind there. We have also had worser market conditions than we would have seen between 2016 and 2022, where we had crazily low interest rates, which would have meant there would have been increase in transaction levels as well. And then if I look at the 12-month number for monthly transactions, where are we? So transactions were 12% lower year on year, but they were 25% higher than April. That's again not unsurprising because April would have been crazy low after the stamp duty hangover. They've picked up a little bit. They are 12% lower than 12-month average, and they're 10.33% below the 10-year May average. So transaction levels are a little bit lower. Again, unsurprisingly, but looking at mortgage approval data, it looks like we're moving in the right direction for that. I've said about the 10-year number. Inflation rate at 3.4%. So I had to get my train of thought there. I think that the April data was originally recorded at 3.5%, but there was an error in the data. So it's actually been at 3.4% for a couple of months now. The Bank of England has said that they expect inflation to get closer to 4% as the year goes on. And then gradually it will work its way back down to the 2% government target. If inflation is sticky, that will have an impact on interest rates, and that could impact buyer affordability and sentiment in the market. But inflation's in a lot better place than it was a couple of years ago when we saw double-digit inflation for, I think, maybe even the first time in my lifetime. Right, last bit, house price index. Um, the key thing for me here, I've been tracking this now, I think best part of 6 months. I think I started it at the start of this year or back in the last year. This is the first time I've seen a monthly decrease as an average, with only Zoopla showing a positive at 0.07%. We are still seeing 1.48% annual increase from the house price index. I must caveat on this as well that this Halifax data is not correlating to the Halifax house price index that I'm going to talk about in a minute, as newer data has come out since producing this and me recording this update. So, what does this all mean? It shows that whilst we are still in the black, if that's right terminology, in terms of house price growth across the UK, it does show that the market is very, very price sensitive and as conditions have stabilized, we've got political, economic uncertainty. If you read my full market update, I talk about perma-crisis and poly-crisis, just everything that's been happening over the last decade that impacts sentiment in the market. So yeah, prices are gradually increasing, but at a slowing rate for obvious reasons. So into house price indexes, I shouldn't spend too much time on it this month because I want to try and be a bit shorter, sharper, sweeter, which I appreciate is ironic considering how long I've just taken on that. I should actually just say, in terms of mortgages as well, the average 2 and 5 year fixed rates are now at their lowest point since September 2022 or October 2024, respectively. So again, interest rates are more appetizing than they were a couple of years ago, roughly. So that is going to bring more buyers to market. We've got more relaxed or flexible stress testing as well, which is helping with purchasing power. Apologies if you can hear dogs barking in the background. It is absolutely boiling hot whilst I am recording this as well, but I only do one take because I don't want to edit these. Anyway, let's move on. Rightmove house price index. So 0.3% price falls in June, which is an unusual dip for June. New sellers have lowered their pricing expectations. Rightmove said about a decade high in competition. The data I look at says it's even higher than that. It's more like 12 years, going back to October 2013. Prices are still almost 1% ahead of this time last year. Busiest month for sales agreed since March 2022, though, which is really, really positive and 6% ahead of 2024. So it shows that there are positive stock levels, which is then increasing activity in the market. Again, I know I'm a broken record, but if you just don't price correctly, then you're just going to sit there on top of the market. You're going to make other sellers who are more realistic and more motivated to move, look better value for money. Buyers will buy that, sellers will sell that, and then the rest are just going to sit there, which is why we've got a 50-50 split in the market. So in terms of this as well, so as I said, buyer activity continues to be resilient. May saw the highest number of sales agreed since March 22, which is great news. Buyer demand is now 3% ahead of this time last year. Number of homes coming to market is 11% ahead according to Rightmove. So there is a much bigger increase in supply, which is almost 4 times as much as demand, which is why we're seeing the house prices start to rein in a bit because of just increased stock level and choice for buyers. As it says here, makes it very price sensitive, so realism is key to selling. That's really interesting as well. I've done these kind of presentations and workshops a lot over the past couple of years. Rightmove data shows that homes which attract an inquiry on the first day of marketing are 22% more likely to find a buyer versus homes that take more than 2 weeks to receive their first inquiry. If anyone wants the 5 or 6 years worth of data from Rightmove, which shows a really interesting graphs highlighting this, please do contact me and I will happily share them with you. In terms of Rightmove House Price Index as well, um, you can see here pretty stable stock levels across the board there over the last year, and time to secure a buyer is around 2 months according to Rightmove. Right, onto Zoopla House Price Index. So Zoopla is showing just under 1.5% house price inflation annually. They've found a 14% increase in number of homes for sale, and days to agree a sale 45 days according to Zoopla. So if I scroll down, 7% buyer demand, 8% flow of new supply, stock 14% up, number of sales 6%. So again, you can see that the supply level and the stock of homes for sale is slightly creeping up and slightly higher than demand and sales agreed, which again is why house price growth is starting to be reined in a little bit. As always, absolute gold from Richard Donnell at Zoopla. So there's plenty of demand to buy homes and more sales have been agreed than a year ago. As I said, serious sellers need to be very realistic on pricing as buyers have lots of homes to choose from. Again, exactly what I said. It sounds so simple, but that really is the simple reality of what's going on in the property market at the moment. If I scroll down here, you can see that in the lower house price brackets, prices have increased more, whereas affordability stretches higher up the market, they have then not been performing as good. So in your southeast London sort of markets, they're being outperformed by the northern areas, Wales, Northern Ireland, etc., where house prices are more affordable. In terms of how long it's taking to find a buyer or how long unsold properties be on the market for, I have already touched on that, so I won't go through that now. Um, this is really, again, very good data. So the market remains on track for 5% more sales in 2025. I think we have 1.1 million transactions in 2024, so we should see 1.15 million in 2025. And house price inflation will remain between 1 and 2%. Again, setting the price right from the outset is essential to improve your chances of achieving a sale for homeowners. Now, for the first time in a very long time, I don't know where on the market have been, but they have had a sentiment index come out. Literally, it must have been like several months, if not a year. But there is some good data in here in terms of sentiment towards the property market. So looking ahead over next year, 51% of respondents anticipated house prices will rise, 21 expected them to be stable, and 10% foresaw a decline. So really interesting data there. I'd be talking about this blog, social media, video content in the living room, etc. And in terms of seller expectations, 39% of sellers expected to secure a buyer within 3 months. An additional 36% thought it would take 3 to 6 months. Only 4% thought it would take over a year to receive an offer. So again, look at the data from Rightmove and Zoopla. How long is it actually taking to sell properties versus what do sellers think? Because sellers tend to think their property is going to sell quicker than it actually is. Going back to my point earlier, if it takes a couple of months to find a buyer, another 150, 160 days to go through, they're not realizing that listing now means they're going to move in 2026. So reverse engineer it, ask potential movers, when do you want to move? And if they say spring 2026, they should be getting on the market right now. If they say Christmas time, they should be on the market a few months ago. Now, in terms of buyer outlet, 27% expect to find a property within 3 months, 28% expect to do so within 3 to 6 months, 7% over a year. Again, I think buyers are not realizing that whilst there is a lot more stock out there, because a lot of it is overvalued, they're still struggling to find a property. It's taking them a lot longer than they think. Most buyers are sellers, and most sellers won't sell somewhere until they buy somewhere. So I can't recommend enough doing VIP buyer campaigns, using some fantastic tools out there. Home Search have a great tool, Proport have a great tool, Spectre do it as well. You can also use social media, use your database, do door knocking on properties that are not yet on the market, trying to help find someone their next home. Again, brilliant strategy. I've got countless case studies of agents getting some unbelievable results from it. Give me a shout if you want to know more about that. So in terms of these timelines, there's some brilliant like pie charts, graphs, bar charts, whatever you call them, highlighting this sort of information. Again, some really good social media content. Um, you've got financial confidence here. I hadn't actually touched on this. So 70% of property seekers feel either very or fairly confident about raising necessary funds for a purchase, so only 17% expressing a lack of confidence. So again, that kind of data there, you can then be talking about what are interest rates doing now, how much is monthly mortgage on an average property, and what does that look like going forward as well. Read up on the notes, how many more cuts to base rate are we anticipating this year? Will it get below 4% before the year is out? Again, talk about these sorts of things because the amount of home movers out there who just assume they can't afford next home, they actually might be surprised by how much equity they've built up in their property. So good conversation to be having. I think that kind of touches on everything. Some interesting bits from on the market in terms of their insights for keywords. So most common things people are wanting are garden, parking, and garage, followed by freehold, land, rural, annex, sea views. So again, if you're not utilizing keywords in your description to Rightmove Zoopla on the market, I strongly recommend you do. Again, if you want to discuss this further, please do reach out to me. Again, you can see most search property types. So you could, for example, say detached houses are in demand, bungalows are in demand. Go target detached properties, send out letters to them saying detached properties are the most in-demand property type according to on the market. If you'd like to know what impact this could have on the value of your home, or would you like to know the new value of your home, there's some really, really good content there. Um, so I don't need to read through that. Right, on to the next one. So this is the latest Halifax House Price Index, which makes my original slide outdated. So monthly change 0%, quarterly change minus 0.3, and up to 2.5% annually. A really interesting data from Halifax. First time buyer numbers have returned to pre-stamp duty change levels. That is really, really good news because first time buyers are a huge um, impact on the property market. About a third of all purchases are first time buyers. They obviously start the chains off, so it's really, really positive that they're in the market. So if I just scroll down to read through this. So the market's resilience continues to stand out, and after a brief slowdown following the spring stamp duty that I've already talked about, mortgage approvals and property transactions have started to pick up, with more buyers returning to the market. This has been helped by a few key factors. So again, you'll see this probably from Halifax and nationwide. Wages are still rising, which is easing some of the pressures on affordability. Interest rates have stabilised, and it's given more people confidence to plan ahead. And that's why I think we're seeing a lot more remortgages taking place as well. Lenders have also responded to new regulatory, I can't even say the word, guidance by taking a more flexible approach to affordability assessments. So over the last couple of months, Halifax have helped an additional 3,000 buyers, including more than 1,000 first-time buyers. I said they make up about a third of the market, access a mortgage that they wouldn't have qualified for before. So I would have touched on previous YouTube updates, LinkedIn newsletters about the affordability changes, the shift on stress testing, which is going to boost buying power. That doesn't mean that people can then start buying at more money, or house price is going to go up, but it means more people can buy, which is great news. So market's pricing two more rate cuts from the Bank of England by the end of the year. And the average rate on newly drawn mortgages is now at its lowest point since 2023. They're expecting modest house price growth in the second half year, just like Zoopla said. So really positive update there from Halifax. Now on to Nationwide. So their latest data is a 0.8% drop monthly and 2.1% annually increase. So again, the softening in price growth may reflect the weaker demand following the increase of stamp duty at the start of April. Nevertheless, Nationwide still expect activity to pick up as summer progresses, despite, as I've already touched on, the ongoing economic uncertainties in the global economy, since underlying conditions for potential home buyers in the UK remain supportive. So again, wage growth, more choice of property, slightly lower interest rates is those underlying conditions that are bringing more buyers to the market. The other thing that Halifax didn't touch on was the unemployment rate remains low. I don't think that's talked about enough. Earnings are rising at a healthy pace, as Nationwide said, and household balance sheets are really strong. Borrowing costs are likely to moderate a little bit if the bank rate is lowered further in the coming quarters, as most analysts expect. So we've got a recurring theme here from a few different commentators in the market, from lenders to portals, which is really positive news because sometimes you can get a difference in opinion. So it does seem like they're all pointing in the right direction, which is slight modest house growth, slight increase in transaction levels, which, there's nothing wrong with a relatively stable market. There's nothing else for me to touch on there. So you can see here the average house price according to Nationwide now stands at just over 271,500. Compare that to a year ago, it's up, and then obviously from 2 years ago. So moving in the right direction, which is really positive news. You can see here house price earning ratio. Look at how it's dropped compared to where it was after the mini budget. So that is slowly but surely improving, which is good news. And you can see that whilst we've had rises in house prices, they have started to plateau, which goes back to what Rightmove, Zoopla, and the Halifax have already said. But positive news in this map, it is all blue, no red on that map, which shows that the whole country is moving in the right direction, which is fantastic news. You've then got their Q2 update as well. I'm not going to touch on this, but I'd strongly recommend having a look at it. It can then give you some data to talk about in your local marketplace. Right, coming towards the end of the recording now. So the latest UK house price index has the average UK house price at 265,000, which is a 3.5% increase annually, but down 2.7% monthly. So this is the month after the stamp duty deadline, which unsurprisingly you are going to get a drop there. I wouldn't worry about that too much. And if we look at the house price index data, house prices are at 265,497, which is slightly down on the peak of March 25. Doesn't surprise me. We hit a peak and the highest prices ever recorded on Land Registry in March because of the stamp duty deadline. But we are still several £1,000s up on almost a year ago. And yeah, I think that we'll be closer to £270,000 by the end of the year. So mark that recording, early mid-July. Simon Gates said that by the end of the year, UK house prices should be around 270,000. That would bring us to what? One 1 to 2% higher than where we are now, which I think will be the case. Right, last couple of bits. I'm not going to run through these. I recommend you go check them out, but I just feel that the data I've already run through is the best data out there to give you the most comprehensive market update. But do go check out the eServe updates. I haven't touched on this one because I don't think they have had a new one come out since I spoke about this last time. The Property Mark one, whilst this is a newer one, have a read of it, but I feel like the data is quite out of date. It's talking about May when I'm recording this in the second week of July, and it's also recorded from a very small data source as well. And then the last one, I just always find it really negative, as you'd expect with surveyors, but read the RICS survey as well. So that is my H1 market update. I will be back in August reporting on all things July. Will we have a summer slowdown or will there be heat in the market? Make sure you hit the subscribe button to stay tuned and find out if that is the case. If you do enjoy, please do like the video as well. Please do share it out with anyone else in the industry that you think would benefit from watching it. And I'd really appreciate it as well if you could leave me a review on Google. I've just hit 300 5-star Google reviews, which I'm super, super proud about. And if there's anything else you want including or actually excluding from market updates in the future, please do let me know. But that is Opening the Gates H1 2025 UK property market update over and out. I'll see you next month.